See, Ayesha, frankly, this is turning out to be a week where market has done nothing special. But that's perfectly acceptable. I mean, markets are not expected to do everything special on a daily basis. So markets have done nothing special, which I think is perfectly fine if you really look at the market from the eye of the Nifty. Fed looks like it's going to be a no-show. We look at the Fed positioning of the market. And where the chink in the armor now seems to be there is that given the way how crude has moved, what's happened to the other elements in terms of natural gas prices, other energy prices, how they've gone higher. So let's first address Fed. 25 bips is expected. There is just no price action. I think the graphics are taking slightly long right now. And this is the positioning of the market. The VIX is flat. The dollar index is at 101. And crude is the only moving part right now. So from a global Fed standpoint, I think it is pretty much looks like Fed is going to be a no-show.
Okay, Fed perhaps is going to be a no-show, but if we just take the clock back to what we recorded in yesterday's trading session, it was an interesting day of trade. We wrapped up absolutely flat with the broader markets pretty much neck to neck with the frontliners. It was 19,680 by the time we shut shop, with names from the metals basket really taking leadership as well as select Adani Group stocks. But the India VIX remains at record lows. You've also got the F&O trends pointing towards a short covering at a 15-point premium on the Nifty, and pretty much, Nikunj, choppiness that we've been seeing for the past many days.
See, the market is not moving linear, which is okay. But the market is not reversing despite the levels at which the markets are. So markets have turned choppy, but the fact that Nifty or the India VIX has touched a record low, maybe this is the first sign of complacency, or maybe this is the first sign that the F&O markets are telling you that, okay, whatever the valuation folks may be talking about in terms of valuation, I guess right now we don't see a sharp reversal. So it's very difficult to judge that why the India VIX at this kind of a record high is at a record low. But if I look at the F&O setup, and we are purely addressing the trader here, the rollovers have not been very impressive. I expect them to pick up between today and tomorrow. Tomorrow, of course, being the F&O expiry. Between the Bank Nifty and Nifty, I would vote for the Bank Nifty more and Nifty less, because for the Bank Nifty, the numbers have been strong. And we did see some disappointment in PSU banks in terms of price action, but that really does not matter. I think SBI holds the key there. Nifty, well, minus Reliance, minus Infosys, the Nifty in a sense will be a bit of a struggle there. And so if you have to choose between the Bank Nifty and the Nifty, I think there is more strength in the Bank Nifty rather than the Nifty. I expect the, in general, the F&O picture to pick up. There's nothing great which seems to be indicating that everybody's in a rara mood to roll over. Similarly, there's nothing scary which tells you that markets are looking bulky and there's no interest. It's just about okay. I mean, the word which you want to, searching for this word, that what defines the market right now. And I think the word right now is that markets are in a mood to rest it out or take a monsoon break or perhaps just consolidate.
Yeah, absolutely. In pause mode, if you will. Tata Motors, that's going to be the big discussion point this morning. Firstly, on the earnings, and it's quite surprising that actually it's JLR and the CV business growth which has managed to fire up for Tata Motors in the first quarter. But the bigger talking point, I think, is going to be the announcement of the DVR shares, Nikunj. The fact that the management is now planning to convert the DVR shares into ordinary shares, and DVR holders are going to get a 23% premium in the swap with the ordinary shares.
Tata Motors will be perhaps one of the biggest turnaround story in the history of corporate India, from where they were, and they've had two scary, near survival scenarios. One, what happened post 2008, and then what happened post COVID. They've survived, and it's a hallmark of what Tata Group can do in terms of turning a business around. Look at the fat loss what they had, and look at the fat debt what they had. From there to engineer and to master this kind of a turnaround, I think is extraordinary. There are two things here, the DVR and then what happens to the numbers. Let's discuss the numbers first and we'll discuss DVR. The numbers independently, keep the DVR news aside, I think they're good. They're firing full cylinders. JLR margins have been strong. The stock has seen a run up. So independently, you can justify the rise, but based on these numbers, you may not get a price upgrade. Nobody should expect a serious price upgrade. A little bit of tinkering on the upside in terms of targets is something which is there if you look at brokerage notes. But margins and the trajectory, and the environment and the commentary from the management, which is the group CFO, Mr. V. Balaji, I think seems to be really indicating that they've got the mojo back as far as the core business is concerned. Now let's look at DVR. Why are they doing it? I mean, why would you do something like this? You're doing something like this because you want to simplify the capital structure. You know, an instrument like DVR is used when you want to raise more capital. They've struggled. You know, Tata Motors has a lot of legacy. It was called as Tata Locomotive, then it became Telco, and then it is Tata Motors now. So it has a lot of legacy. And you know, when a legacy company goes through, they've used different instruments to raise capital in the past. So they're simplifying the structure. Now the DVR buyback is at a premium. So logically, the DVR will rally. That's logical. And there would be an arbitrage which would be at play. Rather than us commenting on something, let the market discover that, you know, where the price would be at play, because there would be an arbitrage, there would be a time analysis, there would be an adjustment. But in terms of a direction move, I think DVR should fly and Tata Motors stock should not fall. What it does to the aggregate picture is your equity goes down by 4%. When equity goes down by 4%, the EPS goes up by 4%. If EPS goes up by 4%, naturally there would be implications of it in terms of earnings upgrade and in terms of the price. So to cut a long story short, they're firing full cylinders. The stock move is now justified.
Is it sort of, sorry to interrupt you, Nikunj, effectively like a buyback without actually spending a rupee when it comes to how you would read it?
Exactly, it's a buyback without spending a rupee, but in this case it really applies to the DVR shareholders. Thank you for just putting it so simply. But what would be the net impact of the buyback? The equity share capital reduces. But in a buyback, the company uses the capital. If Infosys is doing a buyback, if TCS is doing a buyback, they're using a cash kitty. In this, the net impact is not going to be there. That's how it's been engineered. There's nothing wrong in it. I mean, it's perfectly logical and perfectly legal. But the fact that they're considering it just tells you that, look, they're thinking about creating more value for shareholders. In my book, if I have to talk about one of the biggest turnaround stories I've reported as a financial journalist in the last 20-25 years, I think Tata Motors would be right at the top. I mean, really impressed.
And we're forgetting the Nano episode. So it's literally sort of risen from the ashes.
You know, Nano did not damage their balance sheet. Nano was like an experiment went wrong.
Yeah.
But the balance sheet got damaged in 2008 because of the fat debt they had. Then there was a slowdown in Europe. Then they had to deal with COVID. The company, because was a Tata group of company, was able to deal with its debt problem. Any other standalone company would have really struggled. And look at what happened. I mean, we are forgetting what happened to GM. We are forgetting what happened to some of the classic US companies. Ford, GM, they've really struggled in the last couple of years because of the international business. Excepting some European companies, which is BMW, I'm not even getting into Tesla, but BMW or Audi or Volkswagen to some extent, the American car companies have really struggled because of financial leverage. GM, where is GM? I think GM is now almost junk.